Hey everyone, welcome back to the channel. If you're thinking about jumping into an IPO in 2025, then you need to watch this video before you invest. IPOs exciting, but they also come with risks. Today, we're diving into what you must know before putting your hard-earned money into any upcoming IPO. Trust me, you'll want to stick around till the end. Let's get started. First things first, let's define what an IPO is. An IPO happens when a private company offers its shares to the public for the first time. It's a huge milestone for a company, but it's also a crucial moment for investors. Think of it like a new product launch, exciting but untested. You're buying shares in a company that has never been publicly traded before, and that comes with risks. In 2025, IPOs are likely to generate even more buzz, and it's easy to get caught up in the excitement. Media outlets, influencers, and even friends might make it sound like you have to get in on the action. But here's a fact, just because something is hyped doesn't mean it's a good investment. In fact, many IPOs are overpriced in the initial offering, which can lead to a major drop once the stock starts trading. Now, let's talk about overvaluation. One of the most common mistakes investors make is buying into an IPO based on hype without understanding the company's true value. When companies go public, they often have inflated valuations. Think about it. How do you price something like a tech startup with little or no profits yet? If the valuation is too high, the stock may struggle to gain long-term value. Before you invest, always dive into the company's financials. IPOs come with a lot of hype, but you need to understand the fundamentals. Look at the company's revenue, profit margins, growth trajectory, and debt. Ask yourself, is this company sustainable in the long run? Does it have a clear business model? Or is it just a flashy brand? Here's something many investors overlook: the lockup period. After an IPO, insiders like company executives and early investors are usually restricted from selling their shares for a set period, often 90 to 180 days. Once that lockup period expires, a flood of shares can hit the market, causing volatility and potential price drops. So even if you bought shares at the IPO price, you might see significant fluctuations once that lockup period ends. Another thing to keep in mind is the company's track record. Some companies are fresh out of the gate with little history or success behind them. Others, though, may have years of experience in their field with a proven business model. The more stable and well-established the company, the less risky your investment tends to be. So, always check if the company has had consistent growth and whether it has a strategic plan for the future. Lastly, don't ignore the broader market and industry conditions. For example, tech IPOs were extremely popular in recent years, but the industry was booming. In 2025, if we enter a period of market correction or economic downturn, certain IPOs could be at risk. It's crucial to assess whether the market conditions are favorable for the sector in which the IPO company operates. If you're unsure about IPOs, consider alternative investments. ETFs, mutual funds, or even blue-chip stocks might be safer bets for your portfolio. IPOs can be a great way to make money, but they come with a higher level of risk. By diversifying your investments, you're better protecting yourself from unpredictable market movements. So, to recap, before you invest in any IPO in 2025, make sure to assess the company's valuation, financials, industry conditions, and market volatility. IPOs can be an exciting opportunity, but only if you approach them with the right knowledge and strategy. If you found this video helpful, hit that like button, subscribe to the channel, and drop a comment below with your thoughts on IPOs in 2025. Are you planning to invest? Or will you be waiting to see what happens? I'd love to hear from you. Thanks for watching. And as always, invest wisely.